Morning, everybody. Glad to see we've ordered a great crowd in here. Um, and again, from all over the world. I love when that happens. All right, folks, grab your coffee and let's get started. Good morning, everybody. Welcome to the 49th episode of FinTech Insider, the Breakfast Show US. I'm Sam Maule, That's Managing Director, North America. I'll be your host for this morning show. We have been doing this since the very 1st of April. We thought it would be a short-term thing, and here we are, almost 50 shows later. Do let us know where you're watching from. We'd love to hear where our viewers are based in the world. We'll give you a shout-out. And please share the link to the stream. Hit that share little button over on the left-hand side, and hit the like button. Hit every emoji you can see, and please do subscribe to 11FS on LinkedIn so you never miss a show. If you haven't read our latest research report yet, the link will be in this post here. Bianca will get it out there from our London office. It's a very good report. It's focused on the U.S. small to medium business owners and how financial institutions can make propositions to better serve them. Head over to bit.ly/DIGITASMB or click the link in the post. And we also released a research report together with Plaid, the company bought by Visa that everybody knows. And we talked about how open finance will shape the industry. That's at bit.ly/openfinance2020. Okay, first off, 3 news stories from the past 24 hours that caught my attention, and they should have yours. So the latest jobs report has come out. Business Insider has an update on the unemployment numbers in the U.S. U.S. jobless claims totaled 1.5 million for the week that ended Saturday, the Labor Department said. So that's actually good news because that fell slightly short of the median economist estimate of 1.6 million. The figure raised the 12-week total to 44 million Americans, meaning more than 1 in 4 American workers has lost their job during the pandemic. It's also more than the roughly 37 million people who filed unemployment insurance claims during the year, and which comes out to when we had the Great Recessions in 2008. This is about 1.5 million more people in this incredibly short time period. The number of new filings has now declined for 9 straight weeks, thankfully. Continuing claims, which represent the aggregate total of people actually receiving unemployment benefits, was 20.9 million for the week ending May 30th. That's down from 21.5 million in the previous report. The decline suggests that people are starting to return to work as the U.S. economy reopens. And I would say that what I've seen here in Florida, those numbers make sense. Forbes is reporting Amazon will introduce a new credit line for the U.S. merchants on its platform, a partnership with Goldman Sachs, according to a CNBC report. It's the company's first collaboration with an outside underwriter, and it's Goldman Sachs' latest push into mainstream consumer lending. So we all know about Goldman's hit saving and loan product markets, but Goldman Sachs has been making other partnership deals lately. Along with deals with Intuit and AARP, Goldman has also partnered with Apple on a new credit card last year and launched an installment loan business with JetBlue in April. Amazon established its own dedicated lending unit for sellers on its platform in 2012, and in 2018 partnered with Bank of America as the program began to stall. And last but not least, from MSNBC, Amazon said yesterday that it's banning the use of facial recognition software by police for 1 year as pressure mounts on tech companies who are and what their products are building to respond to the killing of George Floyd by a police officer in Minneapolis. We've advocated that governments should put in place stronger regulations to govern the ethical use of facial recognition technology. And in recent days, Congress appears to be ready to take action on this, Amazon said in a statement. We hope this 1-year moratorium might give Congress enough time to implement appropriate rules, and we stand ready to help if requested. Amazon's announcement comes 2 days after IBM said it was exiting the facial recognition business, with the IBM CEO calling for Congress to enact reforms to advance social justice and combat systematic racism. Also on Monday, Democrat lawmakers unveiled a sweeping police reform bill, and on Wednesday, the House Judiciary Committee held hearings on preventing police brutality. Man, there's a lot going on across the world. Let's put it there. All right, with that, let's get our guest on. Today, we're super excited to be joined by Eyal Sivan. Eyal is the host of a newly launched podcast called Mr. Open Banking. And damn, I love that name because it makes me think of Mr. Robot over and over and over again. Eyal is also the head of Open Banking at Axway. On today's show, we're going to talk about his new podcast, how open banking technology is on its way to change the banking landscape in the U.S. and in Canada. Eyal, how are you?
Great. Thanks for having me on the show.
Eyal, you're in Toronto, right?
That's right.
And I've got to ask, I've had a couple of friends that I've talked to in a virtual happy hour that we do there in Toronto, what has the experience been like, especially with COVID-19 and the shutdowns? How's it affected Toronto?
You know what? I've spared the.
Good.
Thankfully, our infection rates were kept at a relatively modest level. However, experienced shutdown like most of the rest of the world. All of the services were closed essential, but now that we've managed to flatten the curve, as they say, a little bit, we're starting to see the reopening of a few facilities, notably parks, campgrounds. We just opened the beach, which is in my neighborhood. So we're starting to experience some reopening. Thankfully, it hasn't gotten too bad.
Yeah, excellent. I'm glad to hear that. For those that aren't familiar with Toronto, just one hell of a city. I'll just put it that way. And a lot of it reminds me of New York, right? The sheer number of restaurants, small business owners that are out there. Love to see, one, that you're able to flatten the curve and get these businesses back up and running. I think that's essential to every city to see them going again. Eyal, the thing I like about you, and I was looking at your profile on LinkedIn, you've been in this space for a damn long time. And by this space, I mean technology and banking.
Yeah, that is certainly true. 25 years. Started in my parents' basement, like a real cliche.
and you've done stints at CIBC and Amex. I love that you started in your parents' basement. That sounds like another great podcast. But you did have a stint at Amex and at CIBC. So whenever people are talking about open banking, one of the very first things you want to look at is their credentials, right? Have they actually been in the trenches? Do they know what they're talking about? Because there's a lot of thought leaders out there that I don't consider to be a leader or to have good thoughts on this topic. So this is one of the questions I want to throw to you. If you're running a podcast that's called Mr. Open Banking, then let's start with what you consider open banking to be. So let's get some taxonomy out there. When we say that phrase, open banking, what does that mean to you?
Sure. And yeah, you're absolutely right. There's a lot of debate around the definitions. The first 3 episodes of my podcast, which just launched yesterday. There's my plug. Everybody go out there and subscribe to the Mr. Open Bank podcast. Launched yesterday. About that, the different definitions in banking, the taxonomy challenges. Some of the things you'll hear, in particular in the US, are this capital O, capital B versus lowercase o, lowercase b debate. So yes, it's important to understand what it is we're talking about. I have to say up front, not everybody agrees with my definition. That's sort of the challenge right now. Different people have different definitions. You mentioned open finance. You talked about the 11FS report. You didn't say open banking in that report. You said open finance. So the definition I'll share is really my own. I think open banking fundamentally means the development of a common standard for a financial ecosystem. That's what it means. To me, it's irrelevant whether you're talking about regulatory driven or market driven. It's still open banking if what you're trying to do is develop a standard. If what you're talking about is publishing open APIs so that you can develop developer communities, or so you have a developer portal, developer.bankname.com, or you have external APIs exposed for dealing with partners like Visa or something. None of that is open banking. Sorry, if you think you have developer.bankname.com and you're doing open banking, in my mind, that doesn't qualify. That's open APIs, but that is not open banking. Open banking specifically is the development of a common, single, shared, open standard for the entire financial ecosystem.
Personally, I love that definition, and I agree. I spent my morning watching you give a talk back in March 5th when you were still with CIBC at the time. And you talked about this. And the thing I loved is when you're on stage, everybody loves talking about APIs, right? And talking about the new technology that's going to change everything. APIs aren't new. They're decades old. They've been around since you and I have been doing this back in the 90s. If you think that taxonomy of APIs, it just drives me crazy when I hear comments like that. But anytime you're trying to come up with common standards, that's hard. my dramatic pause, everybody.
It is. It is. Was that a question?
No, that's a statement and me laughing because I'm thinking about everything I've gone through. I mean, so when you look, let's look globally, okay? Let's look at different markets. If you were to look at different markets, say like Singapore, right, or in the UK, do you think they've succeeded at setting up those standards when it comes to open banking?
Succeeded is a strong word.
It is.
I don't know if there's anyone anywhere in the world who I would give a succeeded, mission accomplished. I'm thinking of the banner, right?
Oh,
I don't think there's anybody who can hang a mission accomplished banner on their open banking efforts just yet. And I am confident that even in very mature environments like the UK, I could get on the phone with some very senior folks who are very much in front of that. And they would say, we have not succeeded yet. We've made good progress, but there's still a lot of work to be done. So I don't think anybody has succeeded. However, you brought up Singapore and the US as an interesting set of examples because they are both market-driven. So they're taking a market-driven approach, whereas Europe are taking a regulatory approach. I don't think they're necessarily behind. I think in many ways, regardless of approach you take, you're going to end up in the same place, at least technically. And I think you're starting to see excellent progress in both of those regions in terms of bank consortiums working together. Singapore is a smaller, more concentrated market, so they're enjoying more progress, I would think, in terms of agreement. A similar market that you could look at that's small, concentrated, and doing a good job of the market-driven consortium approach is Luxembourg. Happen to be close to that one because Axway powers some of the plumbing there under LuxHub. In the US, though, it's a very different market. The US is a unique market in a lot of ways, starting with the fact that they have over 10,000 financial institutions. Right. They have this constant balance being struck between the rights of the states and the rights of the federal authorities to define standards and things like that. And you have a lot of mom and pop banks filling in that long tail. That's why it's still one of the only regions in the world that you can still see those carbon paper, credit card swiping machines. Yeah. So it's a difficult market to standardize on. However, I talk about this in episode 3 of my show, where my guest is Don Cardinal, the managing director of FDX, the Financial Data Exchange. Financial Data Exchange is one strong effort that is trying to bring together all the players, the banks, the fintechs, the regulators, and of all sizes, to talk about building a standard and why it's important to build a standard and to get to that same place. Don likes to talk about them taking an approach much closer to the way you would develop a technology standard. For example, HTTP or Bluetooth. They're actually using the Bluetooth consortium model. But that doesn't mean they're behind, right? They're doing very well on a lot of metrics. I think there are pros and cons to taking a regulatory approach and a market-driven approach. And it really depends on your region and your reasons for doing open banking, which do tend to vary from one region to another.
Yeah, I think I agree with you. I don't think anything's black and white when it comes to this. I think it's incredibly gray, right? I do think there's a lot of advantage to the U.S. system to let the market drive, standards. 11FS is based out of London, and we do cheerlead quite a bit around what's taken place in the UK. This is what I will say. When they went through and put standards around open banking, and they had a deadline of January, I believe it was 2019, when the banks had to meet the minimum requirements of the open banking standards. And I believe 6 or 7 out of the top 10 banks all asked for a deferral on the time frame. So, to constantly hold up the UK as the example of how this works, there's a little bit of reality that kicks in too. And one thing I do want to give you a chance to shout out, Eyal. You, after about 14, 15 years at CIBC, you've now joined Axway. You're their head of open banking there. What is Axway? What is it y'all focus on?
So Axway is one of the leading integration platform providers out there. They've been doing it for over 20 years. One of the things they're really strong at in particular is boring old file transfer, which, while it might be boring and old, is the lifeblood of a lot of the processes that drive not only large banks, but large and mid-sized enterprises of all stripes. Batch files are important, folks. I know a bunch of you out there are kids, but take my word for it. There's a lot of scenarios where batch makes a lot of sense, and you need to be able to do it right. But they also do high-grade APIM. They publish a very modern API gateway, and we're slowly but surely moving to this integration platform as a service space with what I think is a very neat offering. I joined Axway because it really was a match made in heaven. The joke I like to tell is when I left CIBC, I was really intent on starting the pod, becoming a voice in open banking. And the analogy was, it's like I just got to college and I want to party and I want out every night and meet lots of people and have fun and see what's out there. And then like my very first night out, I meet my dream girl, right? And immediately we sort of hit it off. They realized, wow, what this guy wants to do with open banking is exactly what we want to do with open banking. We need that expertise to bring together with our platform offering to be able to take it to market. And then for my part, here was a company that was entirely supportive of what I want to do with the podcast, willing to give me that independent voice, giving me a wonderful, interesting challenge in terms of bringing together the army we have at Axway and going at open banking, guns blazing. And in terms of the size of the company, regular meetings with the CEO. If I joined someone like an IBM, I don't think that would happen. So the fact that I do have support all the way to the top of the house is a huge deal. And I am super excited about us going at open banking together.
So we've already published the link in the comments section to your podcast. So everybody get out there, subscribe and share it, by the way.
Thank you.
Good 3 episodes already out there. I've already started listening myself. I'll fly outside this. Eyal knows what he's talking about. Because again, he comes out of the industry, which is what you want. He's been in the arena. That's always one of my favorite quotes. You haven't been in the arena sometimes, you need to be a little bit quieter, in my opinion. Good question. And innovation for them. I love Corey. Do some great things down there. So Corey said a massive hurdle for realizing open banking bliss. I love that. Open banking bliss is the creation of industry standards on data trust. With this in place, a foundation for a mutually beneficial ecosystem for FIs, fintechs, and customers can be built. So Corey's question to you, Eyal, is what do you believe needs to happen right now to realize that? Open banking.
Yeah. First of all, Corey, you were 100% right. That pillar of digital identity, consent, verifiability is critical to an effective open banking environment. In fact, I would say that getting that part right is not just for open banking. It's important for what open banking is trying to build on top of it, the whole digital economy. If you don't have a framework for trust, consent, and verifiability, then you can't really start to build this global digital economy. So you're absolutely. What are the hurdles to getting there? So there's sort of a good news, bad news story here. From a technical standards side, it's actually really surprising how well things are going. OAuth 2 and OpenID Connect have become de facto standards for creating delegated authorization. This is something that all the tech companies have been on board with for years and years now. It's very much become the standard for driving RESTful open banking APIs. So that part is sort of baked. You've got your OpenID Connect sitting on top, as a encryption mechanism for sitting on top of your OAuth 2. But even there, all around the world, even though they're all playing to different songs a little bit, you're seeing all the open banking bodies coalesce around FAPI as a security profile. So even more specific than OAuth 2 and OpenID Connect, you've got this FAPI security profile, which has quickly become a de facto standard as well. So a lot of plumbing is being built out relatively quickly because various open banking bodies know the importance of getting the security part right. That said, how do you get consumer option in terms of consumers worrying about managing consent and looking at dashboards to figure out who does and doesn't? I think there is an impasse there. There is a bit of a challenge. Some people in the open banking world like to say, is anyone going to read those cookie acceptance notices that up thanks to GDPR, for example? Does anyone read them? Is anyone going to manage their consent and trust? So I think that the interesting challenge there is, even if you get all the technology right and perfect, can guarantee things and give people all the control they want, are they even going to do it? I think that is an interesting challenge that has yet to play out.
So now we're going to give you devil's advocate on a question for this. All right. So this is from Sid Rahar, he's a founder out in San Francisco. Why is a single standard necessary? Even if different banks come up with different APIs, over time, a higher API layer can be written on top of the lower level individual banks that are popular. This is how, for example, different cloud platforms like Amazon, Google, Microsoft have been unified by higher level APIs from other providers like HashiCorp and et cetera. So what are your thoughts on that?
Yeah. So that's Tim Berners to talk about this sort of standard waves of technology. Yeah, and he talks about this idea. There's a cycle, a steady state where everybody's playing to a common standard. Now remember, this is a cycle, so I'm just jumping into an arbitrary point in the cycle. Everyone is a common standard. Let's say HTTP, right? And believe me, I could go backwards and say, you remember when there wasn't an HTTP, right? I am that old, so there wasn't an HTTP. Things called BBSs. So let's say we're all in agreement on HTTP, or let's use something that's a little closer to home, like cell phones, right? So for a long time there, everybody just used plain old GSM or CMA cell phones that just had buttons on them, believe it or not, and they just, that was the protocol. You just had a cellular protocol and a platform for creating cell phones, no matter which company you were, by the way. It was an open standard. And then along came Apple, right? And they just sort of said, we've got something better, right? We don't want to use this weird Microsoft thing. We want to use this thing we've invented called a smartphone. And we have a whole standard that goes with it and a whole way of writing apps. And it's a whole platform, this smartphone platform. But yeah, it's Apple. It's Xcode. It's not going to run anywhere else. It runs on our device, right? So what you have there in Tim Berners-Lee speak is this proprietary solution breaking out of the pack and saying, hey, I have, something that's better than this steady state of the market. Yeah, it's proprietary, but it's better. People gravitate to this because it's better, and suddenly this maverick has created this entirely new market. Then what happens is copycats show up. Android shows up, and they say, I've got something that's just as good because I see this enormous market opportunity. I'm going to try and make it, but it's also proprietary. I'm going to try and create a whole ecosystem around Android. And then what you have is these two competing standards. Maybe a third person shows up, a fourth person shows up, but you have essentially what the gentleman asked about. You have a number of competing big standards. That's what you have right now in the financial API world, at least in the US. That can work for a while and get you a lot of growth via competition, these standards sort of competing with each other. But eventually, as these ecosystems, these platform ecosystems start to develop, the developers who are building things on them start to get really frustrated. They don't like writing things twice, let alone 4 times or 5 times or 6 times. Their ideas don't scale. So technologists start looking for shortcuts. Maybe I can standardize on XHTML or lightweight mobile apps or APIs that allow me to basically abstract out the Android and Apple specific bits of this and just strip it down to some standardized stuff, various GUI frameworks and stuff like that. Ways to go cross-platform because, and I, thank you for acknowledging the trenches, Sam. Yeah, I have been in the trenches, and believe me, writing stuff for multiple platforms is a pain in the ass. You only want to write it once. So you start looking for shortcuts, and that's sort of, in a weird kind of way, at least the market-driven side, how you get to open banking. Because you look at the financial landscape, and you have 6, 7, 8 different aggregator APIs competing with each other. The banks all have proprietary open APIs. So you're a developer trying to create a cool fintech app, and you're going, oh my God, Like my dev costs are 10x, 20x because I have to talk to all these different APIs. No, thank you, right? This business plan doesn't make any sense for me anymore. But if you follow that Tim Berners-Lee cycle, eventually these developers get frustrated. They develop a layer of standards on top of the proprietary solutions underneath, so you can build from there. Open banking, whether market-driven or regulatory-driven, is an attempt to do that. It's an attempt to say, look, there's 10,000 of these. I can't just let them fall into cabals and figure out what's going to happen. This just doesn't scale. It doesn't make any economic sense. I'm losing all my network effects. So the answer is develop a standard so that I don't have to worry about this stuff. It just becomes commoditized like HTTP, and then you can build from there.
Yeah, I will constantly come back to that comment. I mean, Teddy Roosevelt has said it, President Teddy Roosevelt, but Dr. Brene Brown uses that concept of if you haven't been in the arena, it's easy to be a critic when you haven't been in the arena, when you haven't been doing this and lived through it. And the second you said batch, I smiled, right? I mean, because we all know, we all know. I used to work at TSYS on the loyalty side, and you talk about like Canadian Tire was a big client, right? BMO was a big client. You work with any large bank or any large loyalty program, and if you want to look at the input files or the input technology you're using, Axway knows this to no end. It's like working at the UN and needing a translator that speaks 180 different languages, right? And then a made up one, some pidgin English version that comes up out of nowhere, and they just keep coming. So as somebody who advocates for standards, I agree with you. I do love seeing standards that are market driven, right? The consumer, the end users will surface these up. And I'm just a massive fan of this. If you want to learn, folks, if you want to learn more about this, and we can dive in all day. Unfortunately, we're up against the hour. What I would tell you is listen to the Open Banking, Mr. Open Banking podcast. All right. Obviously, if you can't tell right now, Eyal can go deep. And we've had some very deep questions come up. Eyal, we don't have time, but we've had questions about private blockchain. We've had questions around ASIP and PSP and so on and so forth. Folks, the link is out here. You know how to actually access Eyal's podcast. Eyal, what about you? What about you and Axway? What's the best place for people to be able to contact you and reach out? Sure. So I'm very active on LinkedIn. You can reach me on LinkedIn for either topic. I as Axway.com, but the best way to reach me is if you want to send me any of the questions that you have the chance to answer, feel free. I love talking about this stuff. Great. Our audience does too. All right, folks, tomorrow, we're going to have another troublemaker on tomorrow. I'm just going to say that we got Chris Skinner. Chris is a good friend. Eyal knows him. Chris is a trip. He is an 11FS non-executive director. He's an author. He's a speaker. He's been writing about disruption in banking, all the way, for decades now. This will be a lot of fun. Again, if you know someone who'd be good to become on this show, just reach out to us. Ping me at Sam Maule on Twitter, sam@11fs.com, or you can reach out to us at breakfastshow@11fs.com. All right, everybody. Thanks for being here today. We'll see you tomorrow.